Assalamualaikum. We are from Group 3, Section 2, will present about our business proposal. The name of our company is ANA Smart Furniture.
My name is BILQIIS. Would like to present ANA Smart Furniture Company overview and our products. First thing first, this is about us. ANA Smart Furniture is a partnership business owned by Alya and ANISAH. We are a startup manufacturing business located in Kuala Lumpur, Malaysia. We have produced a smart drawer as our manufactured product. We recognize the profound great opportunities as many requests from the public for multifunctional goods, especially those who have minimalist home design taste. Multifunctional goods are highly sought after to provide more home space. Therefore, we turn up to solve those challenges. ANA Smart Furniture expect to attract our regular loyal customer base with ease in the efficient use of furniture. We aim to offer the products with luxurious design at price adjusted to meet the demands of our target market, which are the students, officers, and housewives. We plan to build a strong market position in the city due to partner industry experiences and the large demand in the area. Other than that, our objectives are to achieve the largest market of our product in the area, offering high-quality products with great durability over time, and generate a net income of 350,000 ringgit at the end of the year. And by providing and maintaining a high quality of our products, controlling our financial planning, and motivating our employees by performance incentive are our key to success. Besides, our partnership agreement are no interest on capital, partner salaries is 2,000 per month, and all profits or losses are shared equally. This is our management team structure. Nur Anisa as a founder, FATHIINA as a president or CEO, Alya Nur as a CFO, Ola Ali as a CMO, and Mohamed JABIR as a CPO. These are the list of our team responsibilities.
The founder responsible in setting the ANA Smart Furniture Company's vision and mission, CEO responsible for every decision made within ANA Smart Furniture Company, CFO responsible for the overall financial transaction, CMO responsible for marketing strategy, and CPO responsible in facilitating the creation of products.
Alright, this is about our product manufactured. This is our smart drawer. Our product has 2-in-1 purposes on a drawer with a foldable table. You can fold the table after finishing using it to save space. We endeavor to make the best quality of our product with 30 kg weight capacity, with hardwood materials, and with the dimension 75 cm in height, 40 cm in width, and length of 150 cm. With the table, and our product has many types of colors, which are white, brown, and gray. Our product have many benefits. First, our product is 2-in-1 purposes which ideal to save your home space. Second, our product is using hardwood materials which suitable for high quality that offer great durability over time. And thirdly, our product is luxurious with many type of colors, and our product are compact and foldable which can easy to use and help our customers to be more organized.
My name is Ola and I'm going to talk about our market analysis. First thing, the market that we will be focusing on is the consumer market. Our product, which is the multifunctional drawer, is very important for students and officers to ease their daily activities and help them to be more organized. So students and officers are our target market. Now we are going to know how will be our marketing strategies. We have 5 strategies that we will work on it. First, partnering with local businesses in the furniture sector. That will give our product the best way to reach our target consumers and also helping to get new customers. Second, as we know, online marketing is the trend for the past 10 years. Thus, social media has become an essential platform for creating awarenesses. Furthermore, it would be the best way for reaching the youth and college students. So we will be promote and sell our products through the company's official website, Facebook, Instagram, and Twitter. Third, doing sales promotions to encourage people to buy our product and boost sales. For example, we will have a year-end sale every year and a 50% discount for the third item purchased by customers. Next, for small businesses as ours, the flyers will be an effective way to advertise and publicize our product. It will work mostly within a particular area that includes our target customers. For instance, university campuses will be one option as we can reach more students. Also, new residential estates will be a good place to find people who want to buy new furniture. Finally, to attract more purchasers and household members to buy our product, we will advertise it with short promotional messages and pictures on billboards and posters. Thank you.
Assalamu alaikum. My name is Mohammed JABIR and I'm going to present about the operational plan. Operational plan. The first part is production. We usually go through 3 steps to produce our product, which is called the production process. The first step is getting the wood and indirect materials from our supplier. And the second step is painting and assembling the draw. And this is the responsibility of 50 direct laborers. And the last step is checking the quality. The quality section will check the draw to make sure there is no damage and the product on its best shape. The second part is inventory. By the end of the production line, the draws will be collected and recorded in the inventory. All raw materials, semi-finished goods and finished goods inventory will be stored in the warehouse. We will ensure that all the draws will be stored in the best environment. All the products are stored carefully and it must be arranged in a perfect way to avoid any types of breakages or cracks in the product. The third part is distribution channels. Distribution channels include the intermediaries through which our product will be distributed until it reaches our consumers. Our company will make sure to distribute the product in the best quality and the most comfortable way consumers can experience it. We have 2 methods to distribute our product. The first one is from our own retail store to the consumer directly, and the second method is from other retailers who are willing to buy our product in large quantities and then they will sell the product to consumers.
Assalamualaikum. My name is Alya Najiha and I will present about cost classification. The first one is variable product cost. In manufacturing our product, it requires only one direct material, which is wood. To produce 1 unit of drawer, it requires 30 kg of wood, and the cost per unit is RM2.50. So, the total cost for direct material to produce 1 unit of drawer is RM75. Other variable product costs are direct labor, indirect materials such as screw and hammer, and factory utilities. All of these cost RM10 per direct labor hour. So, the total variable cost to produce 1 unit of drawer is RM135. Next is the fixed product cost. We have 2 fixed product costs. The first one is indirect labor salaries, which cost RM1,000 per month, and factory rent, which costs RM5,000 per month. So, the total fixed cost for the year is RM72,000. So, the total product cost to produce 1 unit of drawer is RM137.87, which is the sum of variable product cost and fixed product cost. 25,100 is the total required production for the year. We have two variable period costs, which are delivery costs and transportation costs. These costs incurred when we deliver our product to the customer. The total cost is cost per unit sold, which is 25 ringgit, multiplied with the total budgeted sales for the year, which is 24,000 units, and the total variable period cost is 1.2 million ringgit. The last one is fixed period cost, partner salaries for Aura and ANISAH, advertising costs, office utilities, and salaries for the management team. So, the total fixed period cost for the year is 108,000 ringgit. The total period cost is 1,308,000 ringgit, which is the sum of variable period costs and fixed period costs. Next, I will present about pricing. We are using cost plus pricing to determine the product's price. Price is determined by cost, subject to reactions of our competitors and target buyers, which are students and officers. In addition, we also use odd number pricing, at which we set our product's price using odd number that are slightly below the whole dollar amount to make it look cheaper and attract more customers to buy our product. The selling price for our product, which is a smart drawer, is 209 ringgit. Here is the calculation to determine the selling price of our product. The markup percentage is 50% on cost, which is based on the industry range.
I'm ANISAH Binti SHAHRUDIN, and I'm going to proceed with break-even and target profit analysis. First of all, for our break-even analysis, we are using contribution margin approach. To find our break-even point in units, we can divide our fixed cost with contribution margin per unit. Our fixed cost is 180,000 and our contribution margin per unit, selling price minus variable cost per unit, we get 24. So our break-even point in units is 7,500 units. And then our break-even point in RM after times out with the selling price, which is 209 ringgit, we get 1,567,500 ringgit. So this is our cost volume profit graph. As you can see, this is our fixed cost, which is 180,000 ringgit. This line will represent our total sales and this line will represent our total cost. So after setting up the graph, we get that our break-even point is here, which equivalent to 7,500 units and 1,567,500 ringgit. If we manage to sell only up to this area, we're going to get loss, and if we succeed to increase our sales up to this area, we're going to get profit. Then for our target profit analysis, we are also using contribution margin approach. Our target profit is 350,000 ringgit. To reach this point, we have to sell up to 22,083 units, equivalent with 4,615,347 ringgit. Then I will proceed with our master budget. First of all, sales budget. Our budgeted sales unit for the first quarter is 3,000 and it will increase by 2,000 at the next quarter. So our total budgeted sales for the year is 24,000. This is the amount of our total budgeted sales after times out with our selling price. And the total of the year is 5,060,000 ringgit. This is our schedule of expected cash collection. We have decided that 30% of our sales will be cash sales and 70% will be credit sales. For the credit sales, 50% will be collected at the first quarter at the quarter of the sales, and the next 50% will be collected at the next quarter. So this is our total schedule of expected cash collection. This is our production budget. We have decided that the desired ending inventory will be 10% of the next quarter sales. And this is the required production. And the total of the year is 25,100. This is our direct materials budget. As you can see, we have only one direct materials, which is wood. For each unit of production, we need 30 kg of wood. And the price of each kg of wood is 2 ringgit and 50 cents. So this is the total cost of materials. Next is our schedule of expected cash disbursement. It's like the same as schedule of expected cash collection, where 30% of the purchase will be cash purchase and the other 70% will be credit purchase, and it is the same. 50% of the credit purchase will be paid at the first quarter, and the next 50% will be paid at the next quarter. So this is our direct labor budget. For each unit, we need 2 hours of direct labor time, and the hourly wage rate is 10 ringgit. This is our manufacturing overhead budget, the list of variable manufacturing overhead, and the total. And our fixed manufacturing overhead cost is 80,000. So this is the total manufacturing overhead cost, and the total of the year is 1,076,000. Our ending finished good inventory. Our direct material wood 30 kg, our direct labor hours 2 hours, manufacturing overhead 2 hours, and this is the cost. Our unit product cost is 137 ringgit 87 cents, and the inventory of the year is 1,100 times unit product cost, we get 151,655 ringgit 38 cents. So this is our selling and administrative expense budget. Our variable selling administrative include delivery cost and transportation costs. The total variable selling administrative rate is 50. Our fixed selling administrative expense, which is partner salaries, advertising costs, office utilities, and salaries, the total is 27,000. And this is the total selling and administrative expenses, and the total for the year is 1,308,000. Our cash budget, our beginning cash balance is 300,000, where we get from our partners. And there are excess in quarter first, also excess in quarter second, third, and fourth. And for the total of year, we also get an excess which is 51,900 ringgit. So the ending cash balance for the next year is 51,900 ringgit.
Next, I will present financial statements. This is the budgeted statement of comprehensive income. Sales from sales budget, cost of goods sold, which is total budgeted sales multiplied with unit product cost. Then we will get gross margin, sales minus cost of goods sold. Then minus with selling and administrative expenses from selling and administrative expense budget. This is the total for variable and fixed selling and administrative expenses. The net income for the year is 399,155 ringgit and 38 cents. According to the partnership agreement, profits or losses will be shared equally between Aura and ANISAH. These are capital and current account for both partners. Aura brings building, equipment and cash into the business, while ANISAH brings cash into the business. These are the profits earned by Aura and ANISAH. This is the budgeted statement of financial position. Cash from cash budget, account receivable from schedule of expected cash collection, raw materials inventory from direct materials budget, ending inventory in unit multiply with material cost per unit. Next, finished goods inventory from ending finished goods inventory budget. So the total assets is 1,445,905 ringgit and 38 cents. Last but not least, liabilities and owner's equity. Account payable from schedule of expected cash disbursement, capital account, current account for both partners, and the total liabilities and owner's equity is 1,445,905 ringgit and 38 cents.
That's all from us. Thank you.